Inventory is climbing, but a lot of that volume is getting absorbed right away. And in July, nearly 2/3 of the new listings were almost gone as soon as they hit the market. And for prices, they just flipped from negative back to positive territory, both median and average pricing. And while homes are sitting longer, giving buyers a little more leverage, the early trend lines hint that power could be shifting back to sellers sooner than later. I'm Karl, your San Diego Realtor, and it's that time of the month where we take a deep dive into the latest market data to see what's really happening here in San Diego. If you haven't liked and subscribed yet, consider doing so now, or you can wait until you see the value in this video. Either way, let's dig into the numbers and see where this market is really going. Kicking it off with new listings, and this month is telling us a lot about where the market could be heading. In July, we had 2,047 new detached listings in San Diego. That's flat compared to last year, a 0.0 year-over-year change, which means detached inventory isn't growing right now. Attached homes are doing better in the short term with 1,304 new listings up 10.2% year-over-year. So buyers looking at condos and townhomes have more to choose from than they did last summer. Looking year to date, detached listings are up 12% and attached listings are up 20.4%. On paper, that sounds good, but here's where we need to zoom out. Since January, we've seen a steady decline in year-over-year growth for detached listings, sliding all the way down to 0% in July. And the attached homes have been on the same downward slope since March. Now remember, 2023 and 2024 were already historically low inventory years. If this trend keeps going, we'll start eroding what little inventory we've managed to build up. And if that happens, the balance could shift right back into the seller's hands, especially if interest rates drop and demand picks up. But bottom line, we're not in the danger zone yet. But if these year-over-year gains keep shrinking, this more options for buyer story could vanish pretty quickly. Next, moving on to pendings, the number of homes that went into contract in July. Detached pendings came in at 1,369, up 2.2% year over year. Attached pendings were 744, down 5% compared to last July. Now here's where it gets interesting. When you combine both the positive growth in pendings with the flat growth in new listings, that means our standing inventory is getting soaked up or shrinking. That's what's happening with detached homes. Looking at year-to-date numbers, detached pendings are basically flat, down 0.6%, while attached pendings are down 5.1%. Here's a perfect example of the detached market getting soaked up faster than it can be refilled. In University City, zip code 92122, detached homes saw new listings drop, but pendings actually went up. That's a clear example of how demand is outpacing the available supply in certain neighborhoods and how quickly conditions can tighten when inventory isn't growing. Here's my take. Detached homes have a mix of positive and negative months this year, which tells me buyer activity is holding steady, but not surging. I think affordability is the big factor here. Detached homes are simply out of reach for many buyers right now, and a lot of buyers who could buy a condo are choosing to wait for rates to come down so they can dump straight into a detached home instead. Now on the attached side, I'm seeing the slowdown tied to high homeowner association dues and rising insurance costs. For some buyers, it just makes more sense to save longer or stretch into a detached home where they don't have to deal with ongoing HOA fees. Bottom line, detached pendings are steady. Attached pendings are slipping. And without more inventory, the detached market could tighten up quickly if buyer demand picks up later this year. Now for closed sales. Closed sales took a dip on both sides of the market. Detached closings were down 10% year over year, and attached homes weren't far behind with a 10.7 drop. Now let's put this into the bigger picture using the data from new listings, pendings, and closings. We had a total of 3,351 new listings hit the market in July. Then we had 2,113 going into pending. That's about 2/3 of the new inventory volume-wise being absorbed right away. Now, if you're wondering why closed sales were down in July, remember those closings were really the reflection of what happened in June. And back in June, pendings weren't quite as strong as we've been seeing lately. That's why the July numbers are softer. Looking ahead, I bet we won't see sales this low in August. Pending activity has been moving in the right direction, and with the recent drop in mortgage rates, assuming that they can hold, we could see the momentum showing up in the closed numbers pretty quickly. Median sell price, the first metric used to measure price movement. Last month, both our year over year and year to date median prices were in the red for detached homes. and it had some people wondering if prices were starting to soften. But July completely flipped that narrative. Detached prices are now up 4.7% year over year and 1.9% year to date, sitting at $1,099,000. That's not a small bounce, that's a clear reversal from June's dip. Since March, we've had a mix of positive and negative monthly readings in the detached market. But overall, detached is still showing positive growth over that period. The same cannot be said for detached homes. On the attached side, we've also seen some back and forth month to month, but overall trajectory is negative, down 7.1% year over year and 0.7% year to date, with July's median price at $650,000. This split matters. Negotiating power isn't as available in the detached market right now because prices are holding up and even climbing in the bigger picture. On the attached side though, the softer pricing trend gives buyers a little more leverage to work with. Now for the average price, this is the other metric used to measure price growth. Just like with median price, June's average price had both year over year and year to date negative growth for detached homes. Coupling that with median negative growth, concern for a declining market was on the table, but then again, July happened. For detached homes, the average sales price now sits at $1,417,843, up 1.8% year over year and just barely positive 0.1% year to date. That shift back into the green shows that the market found some footing after last month's dip, and just maybe, we're not heading towards a decline after all. Ocean Beach, zip code 92107, is an example of a strong price growth despite inventory levels. Detached homes there saw an average sales price jump nearly 12% year over year, even though their average days on market more than doubled. That tells you demand in certain coastal neighborhoods can still stay strong even when homes take longer to sell. The attached side of the market has mixed feelings though. July's average price is $800,489, which is down 3.4% year over year, but still slightly positive year to date at 0.2%. This is another case where the attached market is showing more softness in pricing in comparison to the detached market. Just like with the median price numbers, this split matters for buyers. Detached homes are holding value better, meaning less often room for negotiating. Attached homes, on the other hand, are showing more signs of flexibility in pricing, something buyers can potentially take advantage of while it lasts. Now keep in mind that the median average price metrics are sourced from all of San Diego County. If we were to go micro, like a couple of the examples I shared with you, then we would see metrics scattered about a bit more. So if you are interested in knowing what parts of San Diego are having the hardest time with price growth, aka negative growth, aka more negotiation room, in the comment section below, comment, "Show me the honey," and I'll get you a video on what parts of San Diego your money will likely go the farthest. Moving on, as for days on market, with detached homes, the average days on market in July climbed to 36 days, up 28.6 year over year and 17.2% year to date. Attached homes are sitting even longer, 42 days, which is up 40% year over year and 34.5% year to date. Now at this point in the year to date should continue to increase through December. About this time is where market time typically starts to grow. Now in theory, the longer a home sits, the more negotiating power shifts to the buyer. And right now that's exactly what we're seeing, especially in the attached homes market. Detached homes are still moving a little faster, but this trend is clear. More days on market means buyers have more room to push on price or terms. Now on to inventory of homes to sell, a hot topic and a completely blown out of portion one at that. Detached home inventory for July came in at 3,808 homes, up 22.8% year over year. Attached inventory at 2,677 homes, which is up even stronger, 38.1% year over year. Now, while those numbers still show strong growth compared to last year, the year over year growth for both detached and attached inventory has been declining steadily since February. On the detached side especially, the pace of growth is slowing, and if that continues while pendings hold steady, the extra inventory we've had could start getting absorbed faster, tightening conditions. Again, like I mentioned earlier when we were covering the pending data. As a reminder of the big picture, pre-pandemic San Diego County inventory levels were hovering around 13,000 homes. Right now, even with the recent gains, we're struggling to get to 7,000 total homes on the market. So while it might feel like there's more out there, compared to where we've been historically, supply is still extremely limited. For now, buyers still have more choices than they did a year ago, which is good. And in theory, that helps keep price growth in check to a degree, especially in the attached market where the increase in supply has been more pronounced. The main factor holding pricing is affordability, AKA mortgage interest rates. Now, rounding third and coming home, let's cover the total market overview. And remember, these numbers are a blend of both the detached and attached properties. So this gives us the big picture view of San Diego County. New listings came in at 3,351, up 3.8% year over year. That's a little more breathing room for buyers compared to last year, but as we've seen in the segment breakdowns, that growth is stronger in attached homes than detached. Pendings were 2,113, down 0.5% from last July. So buyer activity overall is basically holding steady year over year. Closed sales were at 1,979, which is down 10.2% compared to last year. That tells us that closings are lagging behind new and pending activity. Again, a reflection of what was happening in June when these deals went under contract. Median sales price in the combined market was $916,500, up 0.2% year over year, while the average sales price was $1,206,456, up 0.6%. Both these numbers are positive, which is a shift from the negative reads we saw back in June. Now, days on market averaged 38 days, up 31% year over year. And days on market is the first indicator of negotiating power shifting from one side of the table to the other. The inventory of homes for sale hit 6,485, up 28.7% year over year. That's a solid increase in active inventory from a historical record low. But as we've mentioned before, we're still sitting nowhere near the 13,000 homes we had pre-pandemic. The blended data tells us the market is slightly more favorable to buyers than it was this time last year, but supply is still historically tight and price trends are holding in positive territory for now. As for the future, rates are the largest influencer and the determining factor for us here in San Diego. And that's a wrap. I hope this data update was valuable and helpful for you to get a better pulse of what the market is doing. Be sure to like and subscribe if you haven't already. This way you don't miss out on these regular San Diego market updates. And if you found this video helpful, drop me a comment and let me know. I'll have 2 other videos pop up in both of these corners if you're looking for more info on the San Diego market. As always, I'm Karl, your San Diego Realtor. I'll see you in the next video.